Hi folks, welcome to our second video whereby we're going to begin where we left off. We left off with an adjusted trial balance that we prepared in the first video, and what we're going to do is we're going to use it to prepare the final financial statements. Income statement, statement of retained earnings, and last but not least, your balance sheet. So now, you can see that I have left the adjusted trial balance in a jumbled up order. That's not the way it's supposed to be all the time, but I'm just trying to see if you know what to look for and if you know where it goes in the statements. So we've jumbled up the order of the accounts here. But you can see in the trial balance we have a debit and a credit column, so all of the accounts are normal balances. So now what you need to do is you need to pick out what question or what items go on the income statement. So the first items you should be looking for are revenue items. And you can see we have two here in the adjusted trial balance. We have sales revenue of $34,050 and interest revenue of $750. So now, if I go in there, I have them in my income statement, and you can see I have total revenues of $34,800. Now, before we go further, again, I'm sure by now you're familiar with the format of the income statement, particularly the first three lines. It's the who, the what, and the when. So it's the name of the company, the name of the statement, and for the period we're producing it, which is for a year or for a period, right? Because it only looks at gathering revenue and expense information over a period of time. Well, now that we've got all our revenues, we've got to look for expenses. So we've got our title expenses, and what do we have? Well, if you look down here, you can see we've all got all kinds of expenses. Income tax expense, insurance expense, interest expense, supplies, and wages. So those several accounts should be there. And oh yes, we also have depreciation expense. We calculated depreciation last time. It's right over here. And we've also got insurance, as we mentioned before, and interest. We've also got income tax expense for $315. We can't forget that. So we're going to total our expenses, subtract that from total revenues in order to get net income of $885. Now, what I've done, I've got a tab here for questions. So I've asked you to tell me, from what you've produced so far, what are the total revenues? Well, total revenues would be right here, $34,800. So we know we've got total revenues, $34,800. Total expenses, well again, we've got total expenses here of $33,915. So this is just making sure you know how to read your own statements. Net income would be the difference between total revenues and total expenses. And that is $885 in our question, so we can let you see that. But the ending balance of retained earnings, we're going to need to do a statement of retained earnings. So now we know that when we're doing a statement of retained earnings, what are we doing? We're going to look at the opening balance of retained earnings, which we can get again from our adjusted trial balance. We've got it sitting here at $5,700. Retained earnings right here, $5,700. What do we add to it? You remember from your studies in the first chapter of our course, net income, right? Net income we just calculated, it's $885. And we're going to deduct dividends that were declared this period. Not dividends payable. Dividends payable are a current liability. But what did you declare during the year, whether it was paid or not? Well, we declared a total of $500. So dividends declared gets deducted, and we're going to have ending retained earnings of $6,085. So you can see this net income amount we calculated when we prepared the income statement feeds into the statement of retained earnings, and once we deduct dividends declared, it helps us to calculate the ending balance of retained earnings, which feeds into the balance sheet. But before we get there, let's make sure that we know where we're going to get our ending balance for retained earnings, and we're going to use it on the balance sheet. Now, I've asked you several other questions here, but again, we're going to need to do the balance sheet in order to get those answers. So let's go in and do it. So now here, I've just repeated the trial balance for you again. And I've got to do my balance sheet, again, the who, the what, and the when. When here is at a date or as of, in our case, December 31st. Some of you might want to say it's at a date, so just say at December 31st. You could say it's as at December 31st, or you can say as of December 31st, but it's at a point in time, as opposed to the income statement, which is over a period of time. So we need to prepare a balance sheet that's classified. So we're going to look at our assets first. Assets go before liabilities. So we're going to separate it up or classify it into current and our non-current items. So we put our current assets in order of liquidity, the ones that are quickest to turn over into cash. And what are those? Well, nothing more liquid than cash itself, which we get from our adjusted trial balance is $3,000. Our accounts receivable would be next at $500. Interest receivable, remember we had interest on the outstanding accounts receivable, $750. That's our supplies inventory. And you can see we have supplies down here at $1,300. And we have prepaid insurance as our last current asset. It's the least liquid at $800. So we have total current assets at $6,350. To that, we're going to add our balance of non-current assets. Well, we're going to look at the only non-current assets we have, which are our depreciable assets. So we've got equipment somewhere in here. Let's see, yep, equipment, $28,000. And don't forget we have to deduct our contra asset account, which is accumulated. Well, we've got it here as accumulated amortization. Should actually be accumulated depreciation. So I'll just change that here. But you know what? In your tax, do you remember when we did this section, they accept either or, accumulated depreciation or accumulated amortization, whichever one you choose. But whichever one we give you in the question is the one you should stick with. But they both mean the same, depreciation and amortization. And we calculated that last time to be $5,400 in our first video. So at net, or the net book value of the equipment, would be the equipment at its cost less the accumulated depreciation, which is $22,600. So if we add the $22,600 to our current assets, we're going to get total assets of $28,950. So now we got to hope that our liabilities and shareholders equity add to the same thing. So let's start with our liabilities and shareholders equity section. So let's look at liabilities first, and let's go to the current ones. Current liabilities normally start with accounts payable, which we can see from our adjusted trial balance is $200. We've got dividends payable here, so all those dividends we declared, we didn't pay them yet. That's $500. Now, it doesn't have to be like that. We could have declared and paid dividends throughout 2009, and only the last set of dividends declared might remain unpaid. But all we know in our question is what we declared during 2009 is still unpaid. So we have to have a liability for the full amount. The point is, it's not always the same that dividends declared is equal to dividends payable. It just so happens in this case that it is, because everything we declared we did not yet pay. So that's $500. We have interest payable. We had that last time. We did an adjusting entry to record it at $200. We had unearned revenue. You can see that here at $750. So we have it in here. We accrued some wages payable in our last series of entries, which was $900. And we also set up some income tax payable when we set up the income tax expense. So if we add up all these guys, we're going to get $2,865. We have a long-term liability, which is a note payable. And again, we know it's long-term because we're in 2009 and we know it's not due for another 10 years till 2020. So it's long-term, and that's $5,000. So our total liabilities are the total of our current and our non-current liability, which is $7,865. Our shareholders' equity, we only have two accounts. We have our contributed capital account, which we see here on our adjusted trial balance is $15,000. And don't forget our retained earnings. Remember, we calculated our retained earnings up here, the ending balance, when we did our statement of retained earnings. So this goes on to the balance sheet at $6,085. So we have total shareholders' equity of $21,085. If we add that to our total liabilities of $7,865, we are going to get total liabilities and shareholders' equity of $28,950, which matches our total assets. So if we go back to our questions, they wanted to know what's your total current assets. We can say what that is from our statement. We know it's $6,350. So let's make sure that's in there at $6,350. The net book value of the equipment, we calculated that on our balance sheet. It's cost less accumulated depreciation, which gives us $22,600. So we'll just put that in there. Our total assets, we know, equals our total liabilities plus shareholders' equity, and we know that that's $28,950. So we can read these things right off the statements once we do them. Our current liabilities, again, because we did a classified balance sheet, we know that the current is separate from the non-current, but our current totals $2,865. That's the total of all these little fellas here. $2,865, so we'll just key that in there. We have total liabilities. Now we have to add in our non-current one, and that's going to give us $7,865. And our total shareholders' equity, we got that when we added our contributed capital and our ending retained earnings balance. And again, our ending retained earnings balance is from our statement of retained earnings, and that's $21,085. So this concludes the preparation of the three main financial statements in our course: income statement, statement of retained earnings, and balance sheet, all from the adjusted trial balance. And we've also gone through a little bit of an exercise where you can pick off and answer what some of the balances and totals are from your financial statements. So this concludes our video that takes us from the adjusted trial balance to the statements and also allows us to pick off some values from those statements and some totals. So I hope you found the video helpful.